Good morning. It is Thursday, June 29th. You're probably wondering what's going on with the markets. We're just going to do a simple review on the Longbow dashboard this morning. But obviously, markets are up right now. NASDAQ, though, is roughly flat. SPY is up 38 bips, and that's been moving around. Let's get to the Longbow dashboard and talk about what we're seeing within the U.S. markets, because that's where a lot of you are focused. So over here in the Longbow dashboard, I'm going to be taking a look at the SPY, the Qs, that's NASDAQ related, and then the Russell, so smaller cap, in terms of ETFs. For the SPY, middle of the range, Qs, middle of the range, Russell, middle of the range, but we're heading here on the SPY towards the upper end of the range. So you've got odds of -4 to 1, so 4.1 to 1. That's not great odds. There's no implied volatility premium or discount, so it's sitting here at neutral. So even though this is bullish in terms of short-term and medium-term momentum, we're not seeing this as being a really great time to be entering. If you're trying to put money to work, we'd be a lot more cautious right now on this. The Qs, it's more towards the middle range. So you get a -1.4 to 1 downside in terms of the odds, upside of 1.2%, but then downside of -1.7%. And then for the IWM, you call it 1.8% upside to -3.6% downside. So that's 2 to 1 downside here for the odds. We'd be, again, really cautious, neutral Longbow core signals. You've got a discount slightly here on the Russell, so meaning that people are complacent. So again, not the time to be like loading up on any of these things. We'd be cautious because if you're reading the Longbow arrows, in terms of miles driven, leadership, and lack of breadth of positioning, I know you're going to hear a lot about a small caps, but be careful, right? You heard Powell this week across the pond. He is going to be raising rates at the Fed. People don't like it when you raise rates, and sometimes things get broken. We learned that in March, right? So sometimes things get broken, not just when you're rising rates really fast and high, but when you keep on plugging along to try to get that inflation down, which they're doing the same thing in Europe, it can sometimes break your toys. And so we'd be cautious here. If we head over to the Doomsday Dozen, I know a lot of you are interested in that. We're down to 89. So a few weeks ago, remember, we were at 100. And guess what happened? The market went down. No surprise to us, and no surprise to you if you were watching. We're at 89. So it's not in the 90s, but it's still in a red hot area. So again, is this the time when you need to be loading up and going long? No, it's not, especially before a long weekend when not just volatility has come down, but also liquidity is a lot less. So be careful here. Make sure that you're protected, that you have defensive parts of your portfolio, and then wait for those times when you're at least in that yellow or green to be really adding into your key positions. Or if you have individual positions that you want, that you're putting them in here. Remember, again, all you have to do is add a ticker. So for example, you like Microsoft, you put it in, you can get all the different statistics that you want. This one has, call it even odds in the middle of the range. And then you can use the technicals to also supplement what you're doing on the fundamental and macro basis to make better decisions. So that's the tip for you today, where we're at in the market, and we'll catch you back tomorrow before the long weekend.